All right, good morning. I hope we are all fine. Abraham, let me get a feedback from you. Abraham, AB,
Yes, Rev. Okay. We can hear you now.
Abraham.
Yes, Rev.
Okay, is it clear?
Yes, it's clear.
All right.
Yes.
So I want to recap where we ended last week,
Okay, please.
and then we move on. Today we'll do a little calculation.
Okay.
Okay. So the last time we were looking at the financial statement of a sole trader. I think per your syllabus, I will introduce you to the other type of financial statement, but we'll limit it to the financial statement of a sole trader. All right. We said there are three types of businesses. The sole proprietorship, which is one-man business, where the owner is the same manager, takes responsibility and enjoy all benefits. And then we also say we have a partnership where there is a share liability and then a share of profit when there is between partners who have contributed capital to the formation of the business. Then we also talk about companies or corporations where people buy shares to form a company, either public limited liability company or a public corporation. And that one too is the shareholders that takes the benefit in the form of dividend. And liability is limited to the contribution of each member. All right. Now we're concentrating on the financial statement of a sole trader today. Then we'll look at how to prepare a trading profit and loss account for a sole trader account. So we said that the financial account of a sole trader is a financial statement that provide a complete overview of the business's financial performance and then the financial position. In other words, the profit and loss account gives you the financial performance, how the company is doing, whether profitable or unprofitable. But bear in mind that every business owner, their objective is to make profit. Every business, their objective is to make profit, except NGOs. Any business entity, its objective is to make profit, except NGOs or government institutions who may have specific social responsibility or social need to achieve. And so when you take a statement of financial performance, in other words, when you take the financial statement of any entity or company or individual, you should be able to see whether the company is doing well or not. Okay. And we said that you can get those information from the financial statement. And there are various kind of information you get. If you want to know whether they are making profit or loss, you go into their statement of financial performance, or which is also called profit and loss account. Profit and loss account. And if you want to know whether they have assets or liabilities, that one you go into the balance sheet, or what we call statement of financial performance. All right. Now, the last time we met, we look at the accounting cycle and we saw how transaction is entered in the journals and then transferred to the ledgers. And then after the ledgers, then you extract trial balance, which is the total in the ledgers. So from the trial balance, the totals in the ledgers, that you now use those figures to prepare the financial statement. Is that clear?
Yes, Rev.
Good. So what it means is that if you are going to prepare a financial statement, you need to prepare a trial balance before you use the figures in the trial balance to prepare the financial statement. So we say that the trial balance is the list of all balances, a list of all balances of all accounts at the end of a specific period, usually at the end of the year. Is that okay? Good. So when you pick those balances, you use them in preparing the account for the entity or the organization or the company. Now, the preparation of the account has a basic format, that you need to follow. And that format is what I have sent to you the last time, which I hope all of you have looked at. So the heading for every account when you want to prepare is the name of the company. The name of the company. You write the name of the company at the top. Then when you come to the first one, which is the trading profit and loss account, then you can now say that trading profit or loss account for the year ended. Then you put the date at which you are preparing it, usually the end of the year. So some of the things are just standard. For instance, the heading for trading profit and loss account should always read for the year ended 31st December, so and so year. Or if the year is not full and you are asked to do it at a specific date, then it means that the person is considering that date as the end of his or her financial year. Is that okay? Now,
Yes, Rev.
let me explain something. We have what we call financial year or accounting year. And then we have what we call the annual year. Now, the annual year starts from January to December, which we all know. From January to December, then we count it as 1 year. Now, the financial year or the accounting year is the period where the company prepare its account. Most often, it's usually the accounting year is usually the financial year or the annual year. But somebody's own might not be. Maybe the person decide to start the year in, let's say, August and end it at September. What that means is that his accounting year will start from August and end at September. And then the annual year will start from January and end at December. Please, did you understand this explanation?
Please come again.
I'm trying to explain the difference between the financial year or the accounting year and the annual year.
Okay.
And I'm saying that the annual year, as we all know, starts from January to what? December, which is 12 months. Is that okay?
Yes, please.
The same way, when a business did not start from January, but started from some place and has decided to prepare its account in 12 months, it means that the accounting year will not fall in December.
Okay.
Example, If he start the business in August, and then he said, I still want to do it for 12 months,
Okay.
then it means that his accounting year will end in September, which is 12 months.
That means, let's say if it is 2025, it will enter 2026.
Exactly.
Okay.
Exactly. Is somebody, any other person having a question about that? All right. I haven't seen any hands, so I assume that it's well understood. So usually we expect that the accounting year will fall in line with the annual year. We expect that the accounting year should start from January and end at December. But if it didn't happen that way, don't force it to be. But then there is a principle in accounting that says, which we call matching concept. Matching concept. And that concept is saying that you match all your expenditure within a particular period against all your revenue you have received in that particular period. I will explain it again. The matching concept states that match all your expenditure that you have made or incurred in a given period against the revenue you have incurred in that same period. What this means is that when you buy something in 2025 and you sold it in that same 2025, don't come and subtract expenses you made in 2026 or in 2024 from the sales you have made in 2025. If you do that, you are not fair to the assessment. You should be uniform. You match all expenditure that relate to the year against all the revenue you made in that particular year. And so if that is the case, then what we are saying is that if the accounting year differs from the annual year, you need to make sure that all the things you are doing fall within that particular year. If there is something that did not fall within that period, you take it out. And if there is something that belongs to that particular year but was not paid, you bring it in. Okay, when we get there, you understand. But maybe let me make an example. Maybe in this year, you make a sale of 2,000, and then you make an expense of 1,000. And the 1,000 expense was made this year. It means that you have made a profit of 1,000. Is that not it? Abraham, are you there?
Yes, please.
Okay. But the principle, the matching concept is saying that you make a sale this year, 2,000, and then you have paid maybe electricity for last year. For the coming year, you saw that, oh, this year you have made profit of 1,000. And so when you are looking at the profit, the way it was coming, you think it's good. So you want to pay rent in advance. You want to pay another 1 year rent in advance, and then pay for some electricity in advance, which is not, you are not going to use for this year, but you use it next year. But you did the payment in this year. The matching concept is saying that don't deduct that payment from your profit because it does not belong to this particular year.
Okay.
I think it's clear now.
Yes, please.
Thank you. So we are moving on. So with that principle in mind, what it means is that every sale that we made this year, we are going to capture that sales figure. And then any return that we have made or we have received, we will take it out to get our net sales. Then we have to determine how much money we spend in making that sales. How much money we spent in making that sales. That is the cost of sales. So cost of sales simply means how much money you have spent in making a particular sales. And this has to do with the money you spend on the product, the money you spend on transporting the product to your factory or your business, the money you spend in putting that product into a sellable condition, and the money you spend in making the sale. When you put all this together, it gives you what we call cost of sales. So how do we get that money? How do we get that cost of sale? From the format that we sent, we said that the cost of sales is, you take, if you were already in business, then it means that you were having some stock or some goods already. So we said that you take the goods you are having already. Then the goods, total goods you bought or you purchased during the year, you add it to it. Are we following?
Yes, Rev.
You are having some goods in your store and you bought additional to it. So you now add the two to tell, it gives you the goods, total goods you have in your shop. Then you take away the ones that you have returned to the people from the one you bought. And it will give you your net purchases, right? Then after that, any money you spend in bringing the goods to your shop should also be added to the cost of the goods. And that is what we call carriage inwards. Carriage inwards in accounting. Money you spend in transporting the goods you bought into your shop is called carriage inwards. So you add the carriage inward cost to the purchases you have made. Is that okay?
Yes, please.
Then it gives you the total cost of the goods in your shop. Okay. If you get the total cost of the goods in your shop, but all we want is the cost of the portion of the goods that we sold that year is what we want. So what do? We now, at the end of the year, we take stock. Then the goods that is left, we subtract it from the total goods available for sale for the whole year. We take the closing stock from it. And that's what will be left will give us the actual cost of the goods that we sold out. Does it make meaning?
Yes, please.
Very good. So if we get, yes?
Yeah, I'm just trying to get this clear. You mentioned a carriage invoice is the amount of money spent bringing the goods to the shop.
That's right.
Okay.
Okay. So if we get the total cost of the goods we sell, when we subtract that cost from the sales, actual sales that we have made, then we will get what we call gross profit. Gross profit. Now, when you get your gross profit, there are some people who contributed directly to the sales, which we call direct cost, and usually wages. The wage you pay to the salespeople, they are direct costs to the sales. You subtract that one too from the sales, and then you now going to get your gross profit. Are we okay? Are we okay?
Yes, please.
We will take an example and look at how it goes. So at that point, it means that you have actually done your trading account. But we want to go further to determine whether we have made profit or loss. That is why the account is called trading profit or loss account. Trading profit or loss account. Or you can even say trading profit and loss account. Okay. So we are saying we have now gotten our gross profit on the trading. Why did we call it gross? We call it gross profit because it is profit at the level that we have not yet deducted other expenses like salary or transportation or other things. We have not yet deducted it from the profit. This one is just the trading profit. Okay. So we need to now take off the operational cost, which is usually indirect cost from the gross profit. And that after taking it, it will give what will be left will either give us net profit or net loss. So, what are some of the operational expenses? So, when you come here, some of the operational expenses are salaries that we may pay, salaries and wages that we may pay. Anytime you see salaries together with wages, it means if they didn't separate it, it means it's an indirect cost. But if they put it straight as wages, then know that it's a direct cost. It should be subtracted. It should be added to the cost of sales and subtracted from the sales figure for you to get your gross profit. But if they say salaries and wages and they didn't differentiate it, then it is an expense. Is that okay? Good.
Yes,
So,
please.
so some of the operational costs are insurance, maybe bad debt, a debt that somebody is owing us, and we realize maybe they say the person is dead and there's no family member who will pay, or the person has gone bankrupt. They have declared him by law. We can't collect the money again. We can write it as bad debt. Electricity charges that we paid, advertisement that we did, insurance, then depreciation on the cars and machines that we have used. All these things are other operational costs that you deduct from your sales to get your net profit or net loss. In fact, if the sales figure is higher than all the expenses and the cost, then you have made net profit. But if it is less than the expenses and the cost, then you are making what? A net loss. And that is why we say this account gives you the statement or the financial performance of the organization. Is that okay?
Yes, please.
So I will allow for questions. Now, there's one thing I will mention before I allow for questions. You see, the main objective of the business was to go into selling. So the sales is their main revenue. So after getting your gross profit, if there is any other income or revenue that has been generated by any means, maybe interest received, discount received, or any commission received, or dividend received, anything that they have received, which is an income to them, apart from the sales that they have made, you then add it to their gross profit before you determine the net loss or net profit. So at this point, I want to stop. Anybody with any question relating to this format, because this format, you have to study it and just keep it in your mind. It should just be rough in your mind that if you want to know a gross profit, you take sales, if there's any return, you take it out of it, and then You take the opening stock, add purchases, subtract return outwards, add carriage inwards, add wages, then you get your gross profit. That one, it should just be something you learn in your fingertip. You understand? So if there's any question, ask, and then we'll take one example and then look at it. So the whole class, any question? If you have a question, just unmute yourself and then you talk. Any question? Hello?
I think some are finding it difficult to unmute, so I'm trying to communicate with the administrator for them to allow them have access to unmute themselves before they can be able to. Yes. So what we'll do is that maybe we can continue. But what I have to ask is, please let the slide come down, go up. Let me. All right. So meaning cost of sale. Yeah. So the cost of sale is the sum of net purchase. Then we have COGAS. Cost of goods, is it accessible?
Cost of goods available for sale.
Yes, cost of goods available for sale. Then closing inventory, cost of goods sold, and then wages. They sum up to the cost of sales.
Yes.
Okay.
So you see, there are some of within the cost of sales.
Yeah.
There are some things that are added to the inventory, and there are some things that are subtracted.
Yes, please.
So, like I explained earlier, you see that the opening inventory is there, and then you came to buy some, which is the purchases to bring. The purchases, you incur costs in bringing it, which is carriage. You add it to the purchases to give you, and then you have returned some of the purchases. You take it out.
Okay.
Now, in accounting, once you put add or less at the narration side, you don't put the thing into bracket or you don't put negative sign against the figure.
Okay.
So you see the figure will be there, but what the instruction you have written, for instance, if you come to under opening inventory, then we say add purchases.
Yeah.
So you see the purchases figure will come here.
Okay.
It came under column 1 because we are going to do some adjustment to it.
Okay.
So the adjustment is that we added the carriage inwards, the cost we incur in bringing the thing.
Okay.
And then we also realized when we came, there are some that we don't need. So we less it from it. So once you bring less here, any figure that comes here means that you subtract it from the rest.
Okay.
And it gives us the total of these three, gives us the net purchase, which we added to the opening inventory. And that gives us the cost of goods available for sale.
Okay. Okay. So I think someone is asking that you explain the columns for us. Maybe where the Ghana cedi sign is it debit, credit, and then?
No. On this presentation, this is a vertical presentation.
Okay.
Because of the invent of computer, you cannot create a T account. You can't create T account to be preparing. Otherwise, you could have used debit and credit side to do this one. But because of the printing, you have the whole thing. And then, for instance, this side could have been the credit side of the account. However, because we are not using the T account, you create a 3 column so that all ending balances that you will not be adjusting will come to this place. And then the second one has to do with what you will be subtracting from the sales side of it. The third one column, which is the nearest to the writing, the narration, is just a column meant for you to do any adjustment, any addition and subtraction before you send it to the place. Is that okay?
Yes, please. So I think please, those who want to ask questions, try and unmute yourself. I think they've worked on it.
I
Try and
think they've
unmute.
worked on it. So
All right. So go ahead and ask the question, please.
Please feel free and ask your question on the format before we use it for an example. So should I continue? Because I'm not getting any feedback.
Please, I think they are still working on it. So you can continue. When they have worked on it, then we'll allow them to. Please. Thank you.
All right. So then we want to take an example of the trading profit and loss account. But I will urge you to go and read on the advantages and the disadvantage of a sole proprietorship business. Some of the advantages and some of the disadvantages, you should read on it. And then you have those theory in your, yeah. Okay. So, like I said, trial balances are extracted at the end of a financial year. And so, even if the financial year doesn't coincide with the annual year, you would have to adjust your transactions so that they will match within the period you are preparing the account. So now, there is a trial balance here. Number 3. There's a trial balance here. I'm reading it. Analyze the following information and use it to prepare an income statement of a sole proprietor using the template you created in the top there. Then it says that trial balance as at 30th June 20x4. So when you see X something, it's just like maybe you put the current date there, maybe 2024. And then the trial balance they have given us is this: the debit side and then the credit side. Then we were told that the return inwards, I believe by now all of you know what a return inwards is. Return inwards is 2,000. The sales for the period is 90,000. Discount allowed is 7,000. Discount received is 1,500. Then it says inventory at 31st May 2023. Take note of the date. The trial balance they gave us is ending at 2024. And then this inventory date is 2023. What this means is that this is the closing inventory for 2023. And so that becomes the opening inventory of 2024. Take note of that. Usually, the closing inventory will not be in the trial balance. Usually, the closing inventory will not be in the trial balance, but the opening inventory will be in the trial balance. And so when you see an inventory in the trial balance, it means it is the opening inventory. Or inventory is also called stock. Stock. So it is also an opening stock or opening inventory. Anytime you see stock or inventory in a trial balance. All right. So we were told that inventory at 31st of May 2023 is 20,000. The purchases during the period was 50,000. The carriage inwards is 1,000. Return outwards 12,000. Insurance 4,800. Rates is 2,000. Electricity 4,500. Bad debt 2,200. Rent is 12,000. And then the total is 103,500 debit and 103,500 credit. Then they gave us an additional information. And that information is that it's a note. Closing inventory on 30th June. Closing inventory on 30th June 2024 is 30,000. I hope you get it clear.
Yes, well.
So this is the information they have given us. And they are asking us to use it to prepare a profit and loss account or financial income statement. And so you see, one thing is having several names. So we said it could be statement of financial performance. It is also called trading profit and loss account. And then we saw over here, it is also called income statement. Are we together? Good. So before we start preparing the account with this information that they have given us, I want us to understand the various items in the trial balance. I want us to understand, we try to understand the various items that in the trial balance. Then after that, we'll try and use it to prepare the income statement. All right. So now, when they say return inwards, who understands returns inwards? Or they can still not unmute. Can someone explain what return inwards means? Hello, class. Can someone explain what return inwards means? Hello. Abraham. Abraham. Hello, class. Yeah, Stephen. Stephen. Hmm. I really don't know. Whether I could. Can the class hear me now?
Right.
Yes.
Yeah, so I'm still communicating with them, and then I think, yeah, please, a different person to try speaking. Let's see. Uh,
Hello, sir.
Yes.
Now we can hear you.
Previously, you were not hearing me, right?
all right, so I think
Yes, we can hear
anybody
you,
can
but
unmute
we
and
can't.
ask the
We
question
can't
now.
unmute ourselves.
Oh, okay. So my concern is that we want to have an example, and then I wanted you people to be clear with the format before we get there. So if you have any question on any aspect of the format, I want you to ask now. Is that okay? So this is the format we have here, because this is what you use when they talk about a sole proprietorship business. These are the common things you find in the business in preparing the account. Is that okay?
Yes, sir.
So if you have any question in the presentation I want you to ask now. Then we move on to an example. So I want to believe that we can go ahead because our time is going. Is that correct?
Yes, sir.
Okay, so this is the question. I'm sure I've sent this thing to all of you, and this is a trial balance. And from this trial balance, they are asking us to prepare an income statement. So what I told you earlier is that every income statement must have a name of the company. So this question did not give us a name. It's a trial question. So let's assume that the name of this company is HRM. But your class is an HRM class, right?
Yes, sir.
So let's assume the name of this company is HRM. And then they are asking us to prepare an income statement for HRM. Now, you take your sheet, your paper, any paper they gave you, then you put the heading HRM trading profit and loss account for the year ended 31st December, then the year they have given you. Is that okay?
Yes, sir.
Good. So I want to see if I can. Good. All right. So this is our question that has given us to a trial balance as at 31st June 2024. And so we are going to say HRM. And usually one of the things you should do is that you should always use the terminology they have used. For instance, we know income statement is the same as trading profit and loss account. But now they are asking us to prepare an income statement. And so you take your sheet, then you say, let me use this one. Let's say this is the sheet. So the name of the company we said is what? HRM. Is that it?
Yes, sir.
If you like, you can put it at the top. Say you can put it at the top, HRM. That's the name of the company. And then the next state line, you said this one, they said prepare an income statement. So you can say income. Please, can you see the thing I'm typing?
Yes, sir.
Yes, sir.
Okay, so we are preparing it together. So I want you to follow. So we are trying to capture the heading. So we say income statement for the year ended 30th June 20x4. So this is what they have given us. Is that okay? So what we put here is showing that we are preparing an income statement for a company called HRM. And we are preparing that statement covering up to 30th June 2024. Is that okay? So what it means is that this company, the accounting year did not fall with exactly on the annual year. Please, do you get it?
Yes, sir.
This company is saying that they started for somewhere, and by the end of the 12th month, they are ending on 30th June. Okay. Now, we're going back to the question. So let's put a layout of the financial statement. So this is the heading. And so we create the first column for Ghana CD for any adjustment, and then for the conclusive figure. So we now go into the balance sheet. The first thing we need from the balance sheet for income statement is the revenue. The revenue. And the revenue is usually the sales. Are we okay? That's why I said that this format is something you should have. You have it in your mind, that if you want to know a profit or loss or gross profit, this is what you need first. You need sales. So you put your sales here. Sales. Your sales. How much is the sales? How much is the sales?
90,000.
I want us to all participate. So our sales is 90,000. What else should we do to the sales? What else should we do to the sales? Who will tell us? What else should we do to the sales? Are you there?
So we are there. Yes,
So we make a sales. What else can we do to the sales? So what you need to think is that when after making the sales, the first question you ask yourself, has somebody returned any of the team back to us? If somebody have done that, then we have to subtract it to get our net sales. Is that okay? Is that okay?
Yes, sir.
So
Yes,
if
sir.
someone return any of the sales that we sold to them, how would they call it?
Returns inward.
The return inward.
So we will now say that let's return inwards. Very good. And how much is the return inwards in the question?
32,000.
You go through the question individually. So as soon as you get a question like this, calculation questions in accounting, you first glance through the questions and see the type of things that are in the trial balance. Okay? So we were told that it's what, 2,000. Is that okay? So we said less return inwards. And so this place is going to be what? 90 minus 2,000. And it gives us what? It gives us 88,000. 90,000 minus 2,000 is giving us 88,000. Are we together?
Yes, sir.
Good.
Yes,
Okay. So usually you underline the one you are coming to do, subtract from. You underline it. Okay. Then we got in our net sales. What should we do now? Now we have to get our cost of sales. Is that okay? We less our cost of sales. And who remember what we said about the cost of sales? Who remember what we said about cost of sales? Can someone say something?
Please, is it the purchases we have done so far?
Sorry.
The purchases done so far.
Yes. But before the purchases, we said that your inventory at beginning, you were having some stock or inventory at beginning. So in the question, we were told that this one, there was an inventory at beginning. Have you seen that? So we bring that inventory before we add what we purchase onto it. Okay?
Okay.
So inventory, because they have given us a date, you can just put the date there. Otherwise, you can also say inventory at beginning. This one, they say inventory at 31st May 2020. X3. All right. How much is it?
20,000.
20,000. Because we will be adjusting it. So with other things. So let's put it at the second column. Now we have the inventory. What else should we consider? What else should we consider? Yes.
The purchase.
The purchases. So what we are going to do is that we will now add the purchases. We say the purchases are goods bought for resale. Is that not it?
Yes, sir.
Good. So the purchases, we also have some adjustment to do for the purchases. So we'll put it at the first column. How much is the purchases?
Sir, 50,000.
50,000. All right. So when you get the question, usually, if you have ruler, you can use it to trace the narration to the figures. If not, you want to take purchases, which is 50,000, and your eyes can deceive you and you come and pick either 1,000 or 2,000. And once you change the figure, you will get your account wrong. Is that okay?
Yes, sir.
So usually when you get in an examination, when you take the trial balance, use your ruler to trace the writing to the figures so that you will not pick another figure for another description. So we were told that our purchases is 50,000. Okay. But the purchases, we bring it to the shop. Is that not it?
Yes, sir.
And the cost involved is what we call what?
The carriage inward.
So let's add the carriage. You add carriage inwards. Is that okay? How much is the carriage inward?
1,000.
Carriage inward. Do we all agree it's 1,000?
Yes, sir. Yes, sir.
All right. Then after that, what else do we do? What else do we do? We want to get the actual purchase. So what do we do again?
Return outwards.
Very good. Who speak that one? Who said it?
Sadia.
You have done well. So we now less what we return to the people, which is called return outwards. Are we together? And that is
Yes,
how much?
sir.
How much is the return outwards?
12,000.
12,000. Good. And if we do that, it will give us our net purchase, right?
Yes.
Because of the teaching. So I'm trying to put these things in here so that you can know what we are doing. Net purchase. Otherwise, you might not need to put it actually. Net purchase. And that net purchase is 50,000 plus 1,000 minus the 12,000. It gives us 39,000 as the net purchase that we have actually made within the year. Is that okay? Is that okay?
Yes, sir.
Okay. So now we want to add our net purchase to the opening stock.
Hello,
Okay.
sir.
Yes.
So please, the return outwards, why don't we create a different column for it, or that's how it's supposed to be?
A different column like?
So the 50,000 and then the 1,000, they are all in the same column with the return outwards.
Okay. The reason they are all in the same column is that we are trying to find the actual purchases that we have made. And the return outwards is out of the purchases we have made for the period. Do you understand?
Okay.
So we purchased 50,000 worth of stock.
Okay.
And then we spend 1,000 cedis to bring it to the shop. So
Okay.
in all, it is 51,000.
Okay.
And then we return 12,000 to the people. So we have to deduct it from the 51,000.
Okay.
And it gives us a net purchase of 39,000. Is that okay?
Yes. Yes.
Very well. So now we have our opening stock and then the net purchase. If we add these two things, it will give us the cost of goods available for sale. Is that okay? So we want to add it. It gives us 59,000. So this is the goods available for sale. Is that okay? Are we following?
Yes, sir.
Yes, sir.
So we can go on. Can we go on?
Yes, sir.
Okay. Now we have the cost of goods available for sale. In other words, COGS. Let me put the full one here. Cost of goods available for sale. All right. This is the cost of goods available for us to sell. But did we actually sell all? When we come to the question, somewhere at the last end, the down, this one is telling us that closing inventory on 30th June 2024 is 30,000. Is that okay? So what it means is that there was a leftover stock, which is the closing stock. So for us to know the actual amount of stock that we sold, we have to take away the closing stock. Is that okay? Closing inventory. We were told 30th June. And how much is that? How much is it?
30,000.
30,000. 30,000. Now, when you take this from the cost of goods available for sale, the difference should give you the cost of actual sales. Now, you want to check your question and see whether there is any direct cost relating to sales, whether there is any direct cost in production relating to the stock. If there is, then you add it to it. So for instance, I said in my explanation, when you see wages, it's a direct cost in production. So you add it to the cost of sales. Is that okay? So let's look at the question. When you go through this question, do we have wages?
No,
Do we
sir.
have wages in it? Look through the question. Yeah. The trial balance, sorry. Look through the trial balance, which is the question. Yeah, then it's okay. Look through the trial balance and see. Do we have wages in it?
No, please.
No, sir.
No, sir.
There's no wage, right? So we can say that when we take these from here, will give us our cost of sales. Okay. Our cost of sales is going to give us the cost of goods available for sale minus the closing stock. That will give us 29,000. Is that okay? Is that okay?
Yes, sir.
Yes, sir.
It gives us 29,000. Good. So look at what this statement is telling us. The statement is telling us that the cost of all the items we sold in the period, the cost is 29,000. And then when you come to the top is telling us that the net sales, that actual sales that we made is 88,000. Is that correct? So now we want to find our gross profit. You can know whether it is gross profit or loss if this is smaller than the cost. But in this case, the revenue or the sales, the net sales is higher than the cost of sales. So we are going to make profit. Is that okay? So our cost of gross profit will be equal to the sales, the net sales minus the cost of sales. So our gross profit is 59,000. Is that okay?
Yes, sir.
Up to this level, is someone having a question? Up to this level, what we have done so far.
Please, can you come again with the gross profit? How did we get it?
How we got the gross profit,
Yeah.
right? Okay. The gross profit is net sales minus cost of sales. Is that okay? Gross profit is the net sales. So let me put net sales. It's because we had made an adjustment on it. That is why we call it net sales. But assuming there is no adjustment, you just call it sales. Is that okay?
Okay.
I'm trying to highlight some of the things that you need to calculate so that if you are asking the question, we can follow it well. Okay. So any other question? Any other question? So the calculation we did from here up to here is to determine the cost of sales. Where I highlighted, everything we did here was to determine our cost of the items we sold. Now, when we say cost of sale, do you understand? Who understand the difference between selling price, and then cost price? Someone should explain to us. Selling price and cost price. What is cost price? Hello, class. What is cost price? Is someone there?
Yes, please, you are here.
And so just unmute yourself and answer. What is cost price? If we say cost price, how do you understand?
Sir, please,
Sir,
the amount you spend to buy the products, or is the amount you spend to buy or produce the products.
So the cost of the goods you purchase from the market together with all the expenses you made in bringing it to the shop.
So we said cost price plus profit is equal to selling price. Is that okay?
Yes, please.
This is the same as cost of sales plus profit is equal to,
So we can see
sorry, you
so your
can you see it?
screen.
You can see my screen.
the
No,
screen is
please.
off.
The screen is off. Oh, sorry.
Hmm.
Wow. I think because I've opened too many things. Can't tell. Can you see it now?
No, sir. No,
Yes,
sir.
sir.
Mm. Can you see it now?
Yes, sir.
Yes,
You
sir.
can see
Sir.
it. You can see it now.
Yes.
Okay,
Yes.
so this is what I'm trying to say. That cost price plus profit equals selling price. Are we okay with that? Are we okay with this? Cost price plus profit equals selling price. Are you okay with it?
Selling price. Yes, sir.
Now, it's the same thing we are having as cost of sales plus profit gives us the sales. Are you okay? So what we are doing right now in that statement is sales equals, sorry, what we are doing in that is equal profit equals sales minus cost of sales. That's all the statement is trying to show. Are we okay? So you see, this is our sales figure. Is that okay? And this is our gross profit. This whole thing over here is our cost of sales. And to get the cost of sales, we said opening inventory, add purchases, add carriage in us, less return outwards, and then you now less the closing stock, then you get your cost of sales. You subtract the cost of sales from the sales, you get your gross profit. Is that okay? Hello?
Yes, Rev.
Is it okay now?
Yes, Rev.
Very well. So we can continue, I hope.
Yes.
Good. So after getting the gross profit, we say you add other incomes. You add other incomes. I think I've explained what other income is, right? Hello? Are
No,
we
please.
together?
Please come again.
Please come again.
I have explained what other incomes means in our discussion earlier.
Not
Yes, sir.
really, please. Oh,
Okay. What I said was that in a business, your main business is what gives you your revenue. Other miscellaneous or auxiliary benefits or income that you get are referred to as other income. So you don't add the other income to your revenue or your sales until you discover your gross profit. Then after that, you can now add the other income. Is that okay?
yes, Rev.
Okay. So I remember I said when we were trying to explain here, I said that this business, sole trader, is buy and sell. So the sales is the revenue. Now, if you are determining your gross profit, you only determine it on the sales. But if there is any income, for instance, in this format, we say that if the person receives any commission, it's additional income, which is not the main income he is doing, but it's an other income he has gotten. And then a discount receive, rent receive. If there is a portion of the store or the shop or the building he also rented to get some money in, that is not the main business he's doing, but it's also brought in some money. So after getting your gross profit, you can now add those small other income. Is that okay? Is that okay, please?
Yes, Rev.
So let's look at this business we are working on. What are the other income in this business? Can
Rev,
someone? Yes.
a quick one, please. So, when it comes to the other income, let's
Mhm.
you are having 3 shops and then you are renting 2 out and you are occupying 1.
Mm.
So the 2 that are bringing in the
Additional
profit,
income.
additional income, are termed as other income.
Yes.
So the question is, what if you are the one renting, let's say, renting the shop from someone for business?
Then that become your part of your expenses.
Okay.
Do you understand?
Yeah.
But if your business, all the business you are doing is to rent for people, then your rental income is your revenue, your main revenue. But since that is not your main business, the rent is your other income.
Okay.
Is that okay?
Yes, please.
Very well. Anybody also having a question? Is anybody having a question? All right. So if nobody have a question, then let's come to the question we are solving. Is there any other income in this? When you look at the question, do you see any other income? Something that the person has received, but it's not his main business. Have you seen something?
Rent, I think.
The rent, once the rent, you see rent in the debit side, is what? An expenditure. Okay?
Okay.
But if rent is in the credit side, it means he has received it. So look through and see. The last time you came, we said all revenue are at the credit side. Is that not it? So look at the credit side and see whether you see some revenue there. Have you seen some revenue? Have you seen some revenue we
Discount
didn't use?
received?
Sorry?
Discounts received.
Very well.
Yeah,
Discount received.
1,500.
So we come here. Discount receive. Discount received. How much is it? Can I clean the thing I wrote at the down here? Or someone is writing it?
1,500.
1,500. I'm asking if I can do away with these ones.
Yes, please.
Okay. So we have our discount receive, which gives us 1,500. Any other thing? Let's look at the question again. We have used the sales? Is that it? We have used the discount? Yes. We have used the return outwards. Did we?
Insurance?
So the rest are all what? Expenses.
Yes.
So now, okay. So this is our total income, right? This is the total income for the business. You usually underline it and then you add it. So this 59,000 plus 1,500 will give us 60,500 as the total income for the business. Okay. Now, then what else do we do? You less operational expenses, or you can say less expenses. You understand? Okay. So let's come here and see which are the expenses that we have not used. Who can mention one? We have some few.
So we have electricity.
So, So it is good sometimes when you are doing solving questions, try and pick it from where it starts. Otherwise, you might forgotten some in it that you have not picked. So when you look at it from here, you see that from here we have insurance, rates, electricity, bad debt, and rent. Is that okay?
Yes, sir.
So you follow it like that. So let's come back to the solution. So we have what? First one.
Insurance.
Insurance. How much is it? Because we will add all. So let's put it in the second column. How much is insurance?
It's been covered.
It's covered, eh?
Yes, sir.
I'm trying to get this one. Okay, good.
4,800.
Insurance is 4,800. 4,800. Then which one next?
Then we have electricity.
No, you have jumped some.
It's rate, sir.
What is rate? Who knows what rate is?
Sir, 2,000.
2,000. But do you know what rate means? You see, the district assembly sometimes will come and charge you something on your shop.
Yes.
Those are what we call rates.
Okay.
So rates are expenses. If you don't know what it is, you won't know how to treat it. Then what is next expenditure?
Electricity.
Electricity, how much?
4,500.
4,500.
Then what is next?
Bad debt.
Who knows what bad debt is?
So you explained that a debt that the person wasn't able to pay.
To
Maybe
collect.
he has been declared a doctor.
Very good. Okay. How much is it? So you charge it against your profit.
2,200.
You treat it as an expense. Then what next? Rent. You see, that is very interesting. How much is the rent?
12,000.
12,000.
Is there any other thing we didn't use? Is there any other thing we didn't use?
No, sir.
We have used all.
Yes.
So I think the purchases.
We have used the purchases. Check.
Okay.
So you see that this is our total. We don't need to even write it anyway. Our total expense will give us this plus this plus this plus this and plus this.
Have we used the discount allowed?
Did we use it?
Asking.
Did we use discount allowed? Do we have discount allowed in the question?
Yes, sir.
Yes, sir.
Yes. So if we haven't used
We have used it. We've used it.
We haven't.
We
Discount
use
allowed is an
receipt.
expense to us. We are giving it out. So it should be part of our expenses. Is that okay?
Oh, okay. We used the receipt. We didn't use the allowed.
We didn't use it should be one of the first things that should come in. Who understand what discount allowed means? How much is it? 7,000.
Yeah.
Who understood what discount allow means?
Discount are given to your customers or your clients.
Very good. Say again.
A customer.
You have said it well, but I just want to be sure I've heard you well.
So please, it's a discount given to your customers.
For what reason?
For purchasing goods at your end.
Very good. Very, very good. So we add that one. That one is seen as an expense that we have made. We have reduced the team. Have you seen? We have reduced the selling price of the team for them. So it's like we are paying that portion of their money to them. So it's an expense to us. So if you add all, you get the total expense you have made in the year, which is this one. So now to get your net profit or loss, what do you do? What do you do? Who tell me?
Sir, please, you deduct the expenditure from the from your profit.
Which of the profits? Now I want you to be speaking like accountant. Which of the profits?
Sir, please, the gross profit.
But the gross profit, after the gross, this is the gross profit. You see this one? This is the gross profit. Oh. But the person had some additional income, which we added to give us this. This is the total income. This is the total net income. So what you do is that you deduct the expenses from the total or the net income, and that will give you your gross profit. Is that okay?
Yes, sir.
Your net profit, sorry. So the net profit in this account is 28,000. All right. Any question? Any question on this? Any question on it?
Please, you said the net profit is the total income minus the discount allowed. I said discount
No.
allowed. The
I'm
total
listening.
total net income minus the operational expenses. Is that correct, sir?
That's correct. It's the net income minus operational expenses.
Sir. All right, sir. Thank you, sir.
Any other question? I'm trying to dress the thing for you, then I send it to you. Any other question on the solution? Look at the question and then look at the solution we had. Then you ask question. Any question? Do you have any question?
Right.
Yes. Yes.
Please, what is a flip chart? I saw
What is
some.
a flip chart?
Yeah.
When you are doing presentation,
Okay.
that paper they put on the board,
Okay.
that's the flip chart.
Okay.
But because we are not using that, those slides were made for those type of presentation. That's why you see some of those things.
Okay.
Mm. Any other thing? Okay. If there's nothing, then I will send you this solution that we have made right now, so that you yourself, you can try it on your own without looking at it.
Okay.
And then when you finish, you look at it and see if you can do it. Now,
Okay.
this is the basic financial income statement. It's a basic statement. There could be some adjustments. All right. And I want to talk about that adjustment. Then we bring today's class to an end. Some few adjustments, then we'll bring it to an end. I don't know if I have a note on this one here. Oh. So that the next time we come, we look at the balance sheet. Okay. Okay. So let's talk about the adjustments. Now, you see all the items, the individual items that we use in the preparation of the account. There could be some change that occur in them during the year, but did not reflect in the trial balance. Have you seen that? For instance, there could be a stock left, which the example we have a similar thing. Some stock had left, which we call the closing stock, and we remove it from the total stock available to get our cost of sales. Do you notice that? Now, there could also be an outstanding payment, or what we call accruals, like the rent, for instance. We were supposed to pay some money to the rent owner. This one, it means we are paid 12,000. Assuming the 12,000, we were only able to pay 6,000. Then it means that for that particular year, we are owing the owner of the building 6,000. When you look at this rent amount, it means every month they are paying 1,000. Have you seen something like that?
Yes, sir.
If you divide this by 12, it tells you that every month they are paying 1,000. So assuming in the trial balance, we were only able to pay 6,000. Then what it means is that we are owing for that particular year another 6,000. Do you understand? Hello?
Yes, sir.
Every figure you see in the trial balance are the things that we have paid for or received money for. Every figure you see in the trial balance are the things that we have recorded that we have paid for or received money for. Now, if we haven't paid all and we were told that, say, the rent, we are paid half and it is left with half at the close of the year, then when we are preparing the account, we need to bring the half that belongs to the very year into the account. Please, do you understand? So, for instance, if in the trial balance, the rent, say, the figure we have for the rent is 6,000, and we were told in the note at the down that rent, we are owing additional 6,000. Then even though the second 6,000 is not in the account, we only need to come and add it to this one, to the first one in the trial balance, so that the total will give us 12,000. Do you understand? Do you understand?
No, please.
I'm saying that.
Yeah.
I explained matching concept. I said any revenue you made in a particular year, you subtract all the expenses you have made in that particular year that belongs to that particular year from it.
Okay.
That's why you understand.
Yeah.
And I'm saying that you rented a shop for 12,000 for the whole year.
Mm.
But at the end of the year, you were only able to pay 6,000,
Okay.
which is half, which
Okay.
means you are owing 6,000 for the year.
Okay.
When you are preparing the account, you will not only deduct the one you are paid from your revenue,
Okay.
but you deduct the whole figure, the
Mm.
one you are paid and the one you haven't paid.
Okay.
You deduct all before you can know whether you are getting a net profit or net loss.
Okay.
Does it make sense?
Yes, please.
Very good. And when it happened that way, we call it outstanding payment or
Okay.
accrued expense.
Okay.
All right. The same way, when you receive some money that does not belong to that particular year, you have to take it out from your revenue.
Okay.
So let's say you are selling iron sheet.
Mm.
These people came to buy iron sheet. They pay all for you and took it away. Then they make some deposit for next year. That next year we'll come and buy another iron sheet. So collect this money and keep it. We'll come and buy for it.
Okay.
They haven't taken the stock away. So
Okay.
that portion of the money, you cannot add it to your sales. You have to
Okay.
subtract it from your sales.
Okay.
Please, do you understand?
Yes, please.
Okay. Those are the adjustments that can be made to the
So
account.
please, how do you go about, let's say they've made a deposit ahead of time and then later the price of the product goes up?
That is one of the reasons why you cannot account for that deposit. So you have to subtract, you have received it. So you subtract it from your sales so that you keep it. When they come, when the people come, you tell them this is how much the price is now. So they will now come and add up to it. Do you understand?
Yes. But
But
let's say,
if it is an agreement, if it is an agreement that they are paying for it now, so that you will keep it for them, then you consider it as a sale in that year, awaiting them to come and collect. Do you understand?
yes, sir.
But in that case, if something should happen to it, you should let them know that it will no longer be your fault.
Okay. Okay.
You understand?
Yes, please.
Okay. Another adjustment that can be made is that maybe you buy a vehicle to be conveying the things, and you estimated that the vehicle will last for 10 years.
Okay.
And you want to make a depreciation provision so that after the 10 years, you can get the money for what you have used it for. What you do is that you divide the total amount that you used to buy the vehicle by 10 years.
Okay.
And every year, you charge a portion against your profit.
Okay.
What it means is you are charging the portion of the vehicle that has been used that year in making that profit.
Okay.
Very well. So those are the adjustments that can be made on some of these things. So today we look at the income statement or the profit and loss account or the trading profit and loss account. We have looked at it. The question is with you. The solution is here. I will just copy it and paste on your WhatsApp platform so that you'll be able to open it. Try the thing on your own, compare to what we did together, and then try and do it over and over and over until you get to a point that you not look at the solution again and you'll be able to solve it. Then you are good to go. Is that okay? It's likely you get a question in an exam like this. as I said, you should prepare a financial statement, a statement of financial performance or trading profit and loss account. Then this is what they want you to do. You should learn how to do it fast. This one we have used more than 45 minutes to do it because we are explaining. You should learn how to do it fast so that maybe if you get about 4 of these to do in an exam, you should be able to do it within 2 hours. Okay. So if there's any question, please let it come. Is there any question?
Hello, sir.
Yes, please.
So please, in case you bought a goose,
Yes.
and then you kept it in your warehouse, and then a lot of it placed in it.
I'm listening, please.
Hello.
Hello. I lost some portion of what you are saying.
Okay. So please, in case you bought a goose and then you've placed them in your warehouse.
Yes.
And then unfortunately, a lot of it got spoiled or expired. With that one,
Yes.
where are you going to place it? Is it gonna be under the electricity and then the insurance, or is it okay? Is it gonna be under the expenditure or where?
Okay. So when such a thing happen, that goods will be considered as damage. Is that okay?
Okay, sir.
And a damaged goods will be written off as an expense against your profit.
Okay.
So you charge it against this one. Sometimes you may have insured it. And if you insure it, what happens is that the insurance will pay part to you. Then the rest,
Okay.
you charge it as against your profit. Okay?
Okay, sir. Okay, sir.
All right. Any other? Any other question? Please, any other question? All right. If there's no question, then we'll bring the class to an end today. I'll send you the solution. I'm trying to just redo it for you. Just put it on a better shape for you so that you'll be able to link up with it. All right. So I wish you well. All the best.
Yes, right.
Yeah.
Thank
So,
you, sir.
thank you very much. We want to ask if tomorrow evening, so that we can go through some of the things we did on our face-to-face.
And the face-to-face, right?
Yes, please.
Okay. The face-to-face thing, sometimes most of those things is good when you are doing it on board face-to-face. But then we'll see how we can. You see, this one, I'm just fortunate today. This idea came that I could just solve this thing in Excel with you and share the two sides, and you'll be able to follow it.
Yeah.
I was so happy when I realized I can do this.
Okay.
So maybe we can try that one too and see.
Yes.
We'll try that one too and see. I hope tomorrow Tomorrow we'll communicate by 6
Okay.
and then see if we can meet them. We look at them.
Okay.
All right.
Thank you.
But as much as we try to, I also try to do my best for you to get or understand some of the things I'm teaching, the topic I'm teaching. I want to be getting feedback from you whilst we haven't ended the course, so that if there's any improvement, I can be improving on it. Probably the way I'm teaching is too fast or too slow, or you are not getting certain things. Let me know early so that I can also improve on it before you end the semester.
Okay. All right. Thank you very much.
Okay. And feel free to contact me on any of these things that we are studying. Our objective is to make sure you have grabbed it nicely and then you pass your exam, and in practice you are able to put it into practice. Okay. Thank you.
Yeah.
All right.
All right. Today the Queen didn't come to class.
So Queen had she's having a challenge. So the phone that she was supposed to use have been snatched from her.
Oh, sorry.
So, yeah, she's working on it. So hopefully this coming week she will get in touch with us again.
And then Hajia, I have three Hajias or two.
3.
Hajia.
2 or 3? 2, yeah.
I think 2, right?
Yeah.
Were they also in the class?
Yes, please.
All right. Okay, so I will share the solution with you, then you can forward it to them.
All right, please.
Mr. Musa, how are you?
I'm fine, sir.
Very good.
You're a good friend. I'm always here.
Okay, that's good. I hope you are understanding the thing.
We will get it. We will get it. It's getting
You should
placed in
get it.
our head.
I mean, if you are not getting, ask questions so that you can get it, okay?
Yes, sir. Yes, sir.
Okay. Thank you very much. Christabel. Some of the ladies don't want to talk. Felix too, I didn't hear of you today.
Oh, so I've spoken.
Yes,
sir.
Then Alima. Madam Alima.
Yes, sir. So I've spoken. Sometimes I mention the other name, Sadia.
Okay, Sadia, okay. Then Beatrice Efa.
That's our accounting course.
Yes, sir.
All right. Okay. Then all the best.
Thank you, sir.
Thank you, Rev.
All right, bye.
Please, let's be connected. I have a short message for all of us, and then
Okay, we are waiting.
I'm coming.
Also,
I hope we are all doing good.
Yes, Rev, we are fine.
Yeah.
All right. By God's grace, I'm also doing great. It's like some people have left, so I'm waiting for them to connect.
People are dropping more. Maybe.
Yeah.
Maybe you should type on the WhatsApp group that they should join so that.
Yeah, that's what I'm doing.
Okay.
Should have said it earlier that after the class, everyone should stand by.
Yeah. All right. So I'll just say then I'll do a voice note. So Madam Gladys said she's a bit engaged today. It's a good morning. We will not be meeting today. I will share a recorded lecture with you later. Please give my compliments to the class. So that is the message. And then I'm waiting for the recorded lecture. And then, yeah, and the slide. Did she mention a slide? Yeah, the recorded lecture. So we'll wait for her. When she sends it, then I'll forward it to the page. So what we'll do is that I think we'll go on a break as we prepare ourselves for the introduction to microcomputers. So you can take your slide, the previous slide, and then you go through. I think that will help all of us. Myself, I need to. Are we good?
Yeah.
All right. So thank you very much for connecting. If you are not getting something, when the lecturer asks, are you getting it, and you are not getting it, just come up boldly and say you are not getting it. Okay. If you are not getting it and you are saying that you are getting it, So let's try. We are all trying, we are all pushing, and then we'll go through together and we'll finish well. So tomorrow evening, that is after 6 p.m., we'll have introduction to accounting again, so that he will take us through some of the things that we are finding it very easy to understand. I don't want to say difficult. So I think that is that. So today I like the way everyone is contributing to the studies. I like it, and then keep it up.
Okay, thank you. But have we all agreed on tomorrow evening? Because tomorrow is Sunday, the following day is Monday, so Sunday's evening I kind of tight. So I think I don't know of the others.
Yeah. So tomorrow evening, I don't know, but if we are all good, then we'll communicate on the page. He is just devoting an hour of his time, an hour or 1 hour 30 minutes to go through with us. Okay, and then aside that, I said earlier that all the time will not be in favor for all of us all the time. So we need to put the necessary sacrifice we need to put in place, and then do it once and for all.